Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello traders, checking in on the S&P 500, and we had a very weak day. So a significant lower open, a significant bounce. There was plenty of opportunity in both directions today. And then a significantly weak close with some White House briefing and the president talking. And finally, the market is starting to realize, they're starting to admit this is going to take a while. We're going to be looking multiple months out. We might have to restrict travel. I personally wouldn't be surprised to see airlines shut down for a couple weeks. I personally wouldn't be surprised to see the stock market closed for either a few days or a couple weeks. Prepare for anything. We are currently in a market environment where we are seeing things that we've never seen before. So prepare for the unexpected. Could we see a halt that lasts 2 weeks? It's a possibility. And it's going to be the kind of thing that they announce when the markets are closed. And it's going to be the kind of thing that gets a lot of people by surprise and traps them if it happens. This is complete speculation. I personally just have a feeling it's going to happen. Usually my feelings are pretty spot on, but that's just, for me, what that means is I'm just cash for the vast majority overnight, and if I am keeping any positions open, they are very, very small, and that is the way that I am trading this current market environment. So we had some great signals for day trading today. I didn't take a trade until the high of the day. As soon as the bull move started, I just wasn't comfortable enough with a bullish entry. So I just waited for an hourly lower high. There's my anti-FOMO. I know any bounce is just looking for an hourly lower high. So waiting for a loss of the 5-minute uptrend or other high or low risk, high reward scenarios for a bear entry is what I did. So we actually continue to watch Bitcoin and correlations because we had a 2-minute equilibrium here. It broke bullish on gold at 1018. It broke bullish on Bitcoin at 1020, it broke bullish on SPY at 1026, which means there was an 8-minute heads up on a gold bull break of the same pattern and a 6-minute heads up when Bitcoin followed as well, and then SPY followed along. So there's correlations out there among everything. This morning, Bitcoin, oil, SPY, gold all look the same on the hourly and 4-hour time frame. And then throughout the morning, they started to detach from their correlation and looked less similar, but that 2-minute equilibrium was a great heads up. So the bearish entry that I made, it got to a point, we got extended enough on the 5-minute time frame that I said, okay, I'm just going to enter bearish on a loss of the 1-minute uptrend and top fish the high of the day at that point. So what I did is we saw the high of the day, we pulled back for 3 minutes, we did break a support of 255.44, and I then entered bearish on this tiny bounce, put my stop above the high of the day, and then rode that SPXS position for the majority of the day, and I flipped it a couple times where I then would exit on a bear break, reload on a 5-minute lower high. I mean, look how clear these lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. You get the point. I was just flipping it a couple times, and then I exited my bearish position and flipped to bullish on a break of this beautiful falling wedge on the 2-minute time frame. Why was I looking for a falling wedge? Because I was looking for an hourly higher low to try and form. Why was I looking for an hourly higher low? I'll tell you in just a second. So 2-minute falling wedge, increasing bull volume. When this bull break occurred, everybody in the chat room was, what's the news? What's going on? The news is we broke the pattern bullish. It's increasing bull volume with everybody responding to it. So on this break, I exited SPXS, entered SPXL, and then quickly exited SPXL. I wasn't going to hold it for long. Just a quick scalp on that bull break. We then had a chance for the bulls to change the 5-minute trend to set the hourly higher low, and they failed. And then the bearish reaction into the White House briefing. So I was looking for that 2-minute falling wedge because of the setup. We bounced 8% from the low of the day to the high of the day. That's another reason I was looking bearish. The past 2 bounces we've seen in this market have been 9%. So when we start to get to 8.2%, start scouting bearish. We then pulled back significantly, so a straight shot up and a straight shot down, and that's why I started looking for a bull move towards the end of the day. It ended up being that falling wedge, but again, no follow through. In the end, where do we stand? Bears in complete control. If bulls cannot change the hourly trend, they remain not in complete control. The bears have complete control. If we break support of 237.36, we are back to free fall. The next level is the 2018 low of the 2018 dump low, 233.76. Those are the two most important support levels, and anything on the hourly time frame under 256.90 is just an hourly lower high. We have to see an hourly trend change as step number one for bulls to prove anything. If they do it, we zoom out, and then from there, 271.48 then becomes the key short-term resistance to be watching. Close near the low of the day for the third time in the last 4 days. Again, this market is in complete control of the bears. There's still a lot of fear out there, and there's not really a short-term catalyst for bulls. The Fed is out of ammo. The Fed tried to see the market respond bullish by throwing some money in and saying we're going to help everybody. It's not working. So barring some surprise headline about vaccines, I only think there's going to be bearish headlines. I think we're going to start seeing some hospitals get overwhelmed in some areas in the U.S. that are getting hit harder. I do believe we will see cities lock down. I think San Francisco is starting to lock down a little bit. We're going to see curfews. And again, possibility of flights being grounded with the government then bailing out the airlines. And then possibility of shutting down the market for a who knows how long period of time. Be aware and be prepared for anything. Both directions need stop levels, and both directions would be at risk on a market halt. Let's say the market stops trading for a week, and then a week later, cases are subsiding, and there's some progress with a vaccine headline. Then we could gap up open, and shorts could get hurt badly. And of course, if it gets worse after the halt, then we could see a gap down open. So everything is on the table. Protect against everything. History is not a great guide at this point because we are seeing things that we haven't seen before. For example, the VIX closing at 82.70 is the highest close in the history of the VIX, I believe. And you'll have to double check me on that. 2008, we did not close a day this high. So let's get into our technical analysis. We just did SPY. IWM is weaker. IWM, I think we pulled back something like 45% or so. 40% from that high, and that's not even the all-time high. On any bounce, the hourly downtrend is our guide. We dropped to a new low of the day at the end of the day. Short-term resistance, 108.10, 111.30, and the next support level that we're looking at is 100 psychological. Keep an eye out for IWM because it is the weakest, and if it starts to bounce first, maybe we can use it as a little bit of a clue. QQQ closing at the low of the day. Anything on the hourly time frame under 184.68 is just an hourly lower high. Support on the daily time frame, we're looking at 169.16, 169.27 was a dump low, and then we would look at 166.57. Financial sector. Hourly downtrend is our short-term guide. Anything under 21.34 is an hourly lower high. Support 18.93. And then looking back from there, the next level, we already, let's see, that low of 2018 has broken. 18.94 has broken. We broke it by a penny, so 18.94. 17.31 comes after that. We have to see a daily bounce start to get going soon to stop this free fall. Hourly chart for XBI, anything under 71.51, just an hourly lower high. Next support level, we're looking at the low of the dump in 2018, 64.38. XLV, hourly downtrend. Short-term resistance is now 85.84. 80.67 is support. And if 80.67 breaks, we are looking down at 78.74. SMH down at the low. Hourly downtrend, I would consider anything under 112.44 as an hourly lower high. Daily time frame. Next support level, 100 psychological. 97.61 comes after that. TLT, our daily higher low is set now. So what I would expect in normal trading conditions, which this certainly is not, But this is an equilibrium setup where we look for a lower high compared to 179.70, and we look for a tightening daily range. So keeping an eye out for a loss of the hourly uptrend. We are now in an hourly uptrend. And keeping an eye out for a loss of that to indicate our daily lower high has been set. And considering we are still 10% below our resistance, that's why we're anticipating a lower high as the most likely scenario. So the VIX, making some history, strongest close, daily higher low of 55.20, bulls in complete control. I should say the uptrend is in complete control. And we're looking at 83.60, and then we do have a high level from 2008, 96.40. VIX is still going up. Gold, 4-hour downtrend is our guide. Yes, a bounce today, but yes, still a 4-hour downtrend. We have to change the 4-hour downtrend for any kind of daily bounce to take place. Bulls are hoping for a temporary volume climax to lead to a bounce. Weekly time frame taking out supports. 1445 is a support that did hold. That is clearly our most important level now. Look at the bounce right above it. Let's see if the bulls can change the 4-hour trend from here, because it's still a downtrend. If not, silver, complete dump. We've been pointing out day after day after day how silver is way weaker than gold, how the ratio between the two is the highest level favoring gold in a decade plus. And silver today dumped an extremely large amount. And silver is at 11-year lows. You cannot be a safe haven and be in the biggest market fear in a decade, but be at 11-year lows. So silver on the 4-hour time frame, just looking for a lower high to be set on an oversold bounce. Bulls have a ton of proving to do. And you look at the monthly time frame for silver, we were this low back in 09. Giving all of the strength back. Miners are in their own world, and that is a false close for NUGT. We closed up around $11. So short squeezes all over the place. These ETFs at risk of decoupling from the assets they're supposed to be tracking. Just be cautious of that. Same for UWT. These leveraged ETFs are not designed to be trading in this kind of environment. This environment is very unusual, as we've been saying many times. So when you start to see these crazy moves on these ETFs, just be extremely cautious. I promise you, people are blowing up their accounts on leveraged ETFs left and right. NUGT had a 100% bounce from the low of the day today and never changed the hourly trend. So day trade it, absolutely, but swinging these names has a huge amount of risk associated with it. I promise you, there was a very comfortable short in NUGT from Friday who very quickly lost a lot of money. So we will need an hourly trend change for confidence in any bounce follow through, and we will be looking at anything under 34.20 as just a daily lower high for NUGT. So bull miners bouncing in a big way, but no hourly trend change, just a bit of a short squeeze. Look at this move at the end of the day. We broke 970, the high of the day, and within the next half an hour, we were up a solid 16% plus. So again, short-term opportunity is there. And then after that 17% move in a half an hour, 15 minutes later, we dropped 19%. Insane volatility. Oil is down testing our low. If we break 27.40, oil is back in free fall with 26. Where's that level? 26.08 as the must-hold level from there. If 27.40 breaks, S&P 500 bears get a little bit of momentum as well. And the hourly downtrend remains intact. Solid bounce, no hourly trend change, same as SPY, correlation significant. I need an hourly trend change and a move up over $30 if we're going to have any hope of 27.40 support holding in the short term. Natural gas is a 4-hour equilibrium. I actually like it better on the 12-hour. So low of the dump, high of the bull move, higher low, lower high. Support is 1754. Bulls must hold that level. If we do, we'll then look for a lower high compared to 1952 and the tightening range to continue. So that's where we stand in the market overall. Bears have complete control. There is risk swinging bearish. Anything can happen in this market environment. But if you forced me to swing, I would absolutely be swinging bearish. Hourly trend changes are needed at a bare minimum to even look for daily lower high bounces. Bears are going to be waiting for daily lower highs to short again. Oil is on the verge of a key support. Leveraged ETFs are breaking in a certain sense of just insanity moves, and extreme caution is warranted in this market. There is a lot of opportunity in this market right now. There's also a lot of opportunity to lose a lot of money. So the last thing we want to be doing is losing money right now. I personally had a good day trading day today, but aside from that, just staying very cautious, knowing that when things reach a norm, I've proven to myself over the last however many years, 5-9 years, that I can day trade consistently in a normal market environment. Trading in this current environment is not normal. Some people take this opportunity to really go for it and be really aggressive if their financial situation allows for that, and they can make a lot of money. It's what I did in the Bitcoin raging bull run of 2017. I went really aggressive and I traded constantly. But I'm choosing not to do that in this current market environment, as it's a little bit more unusual, and I'm just being a little bit more cautious. Congrats to those that have made a lot of money in this market. If you are very comfortable financially, consider stashing a little bit aside to perhaps help those that are going to be feeling a rough time in the next few months. And that's one of my do good things that I'm doing, is all profits right now are going into a community bailout fund, because I know I have a lot of friends in the service industry that are going to be hurting. And the fact that we can make money in this current environment is a gift. So I hope you're well. Nature is your detaching, mind-clearing tool to utilize. And I wish you all the best. We'll be back tomorrow. See you then. Saw that guy catch a frog. He's got a full belly.